shares of United Airlines are rising as the company tops first quarter earnings expectations, provides insights into guidance amid macroeconomic uncertainty. Third Bridge Global Head of Sector Analysts Peter McNally joins us now with a closer look at first quarter results for United Airlines. Peter, it is great to have you on the show. I'm just looking, this stock is ripping here in the after hours, Peter. It's up about 6.5%, but let me get your take, your response to the report and the results, Peter.
Well, I think there's a couple things to keep in mind here is, number one, expectations were set pretty low at this point. Estimates have been coming down for a month, started by Delta's pre-announcement in the middle of March. But the second thing is that, United sort of put a stake in the ground here in a recession scenario. Their earnings estimates will be $7 to $9 a share. So, and that would be with a 5% decline in revenue. And they're not sitting back. They're cutting 4% of capacity starting at mid-year, adding on to what they've already done as we've seen a slowdown in demand for air travel. And so the big picture is it's still a pretty profitable airline, despite some of the headwinds that have merged here in the first 3.5 months of the year.
Peter, Simeon Hyman, is that fair to extrapolate that to the sector? You think of airlines as quite cyclical and not being able to do that well in a recession. So they're saying it won't be that bad. Can we extrapolate it?
I would not, Simeon. Look, the one thing about United is that they've always been investing for growth. And so they're taking even more planes that are more efficient and allow for more premium seating, and that's where the money is made. And then the real distinguishing factor for Delta, United, and to a lesser extent American, is their loyalty programs that have been a great competitive advantage, and that's going to add to earnings. These smaller regional airlines and the low-cost carriers are finding it more difficult to compete because they got smaller fleets, okay, and they're dependent also on Boeing delivering new planes or and some more competitive routes. And it's more difficult for them. So I think United's a standout. They've been investing aggressively for years, like in this fleet, and at times it's made people nervous. But at the end of the day, it's always worked out for them. So that's why I don't think I would extrapolate this to the rest of the industry just yet.
Peter, fuel costs have been coming down here. What does that mean for United and the broader sector?
I mean, it has certainly helped. But the one thing about it is that it helps all the airlines equally. Nobody really has an advantage when it comes to that. I mean, Delta to a small degree in that they own a small refinery outside Philadelphia, but it doesn't offset the hedges or create that much of a hedge for them. It's just certainly allowing a cushion as revenues fall or revenue expectations fall with this demand weakness we've been seeing lately.
Has there been a change in the hedging protocol? Because we used to get surprised back in the day. The oil prices would come down, and then these guys would come out and say, well, we locked in for the next 18 months, so it doesn't make a darn bit of difference. Has that changed in the last 10 years or so?
I mean, there's been less of it. I mean, look, oil's been fairly volatile in recent years, and you're buying insurance, right? And that insurance has gotten more expensive. The more levered companies, with weaker balance sheets have been forced at times to lock in those prices. But the Deltas and the Uniteds of the world, it's not making that much of a difference.
Peter, the earnings calls tomorrow morning. If you had the chance, ask the CEO a question or two, what would be top of mind for you?
The slight changes in the CapEx plan. They've dialed it down a bit. This is the second year in a row where they've walked it back. So what actually gets United to go all out for the 2026 plan that they've had what they need to see in order to push ahead with those investments to invest in the new aircraft?
Final question, Pete. I want to switch gears here a bit because this company as well, Boeing. Bloomberg did report China has ordered its airlines, Peter, not to take any further deliveries of Boeing jets. It sounds like what we have here is just this tit for tat in the trade war, Peter. I'm just curious what you made of that headline. What did you make that news? What did it mean for Boeing investors?
Boeing has 130 planes on order with China of the 6,400 in total in their unfilled backlog. It's not that big of a deal on that news, just itself. And it's not like China can go anywhere else. It's, Airbus doesn't have a whole bunch of planes sitting waiting either, but I think it's just kind of more noise when it comes to Boeing financially than anything else.
All right, we're going to leave it there. Peter, as always, thank you for that instant analysis and insight, my friend. We appreciate it.
Good to see you.